According to one of the biggest lenders in Canada, their clients are seeing interest payments come down. Let's talk about how somehow this lender is saying that their mortgage payments are actually going to be lower for those renewing mortgages this year. We're going to be talking about how there is a house in Toronto being sold right now for $1. What impact is that going to have on the real estate market? How about ReMax settling a lawsuit, and a massive one at that, all centered around commissions being paid to buyer's agents? Of course, we got this week's best interest rates and Matilda's question of the week as to whether or not CMHC and other real estate companies' forecasts are biased. The first article this week is a house in Toronto that is listed for $1. I've talked about this on the channel before. Agents will use this as a marketing strategy. They put the house up for exactly $1, and no, you're not going to be buying this house for $1. Even if you offer them exactly what they're asking for, they don't have to accept your offer of $1. Sorry. Whether you think that's fair or not is, of course, a different question. But it got me thinking about this a little bit more. What if when houses were put up for sale, there was just no asking price at all? What kind of price discovery would we have if that was the case? I've said it before to my own buyers that the asking price is just a number on a piece of paper. It's not indicative of the value of the house, and just because you paid more or less than asking price doesn't mean you got a good or a bad deal. The most obvious problem with this is, how do you search for houses within your budget if there's no asking price? Because whether the asking price is right or wrong, it at least kind of starts things off, and then as a buyer you can decide whether this house makes sense or not at that asking price. But it would be interesting to see what houses would ultimately sell for if there never was an asking price posted on the listing. I'm curious, let me know in the comments below, what do you think would have happened if there was just no asking price on new listings? Next, let's talk about how Bank of Montreal is seeing 1 in 3 of their mortgage renewals having lower payments. No, this is not clickbait, it's actually true. Bank of Montreal is saying that approximately 30% of those renewing mortgages with them this year are seeing their payments decrease, not increase. Of course, there's been so much talk over the last couple of years that as mortgage renewals come up from those ultra low rates into current rates, which are higher, all of these people are going to be unable to afford their mortgages, and they're going to be forced to sell their houses, and there'll be this wave of distressed sellers.
Those aren't mountains. They're waves.
But of course, 30% is not the majority. Still, the majority of those renewing mortgages, even with the Bank of Montreal, are seeing payment increases. What I did find interesting in this report is that on average, the monthly increase is $150 to $200 a month. For most homeowners, that's probably not going to be the make or break difference between continuing to be able to make their mortgage payments or having to be forced to sell the house. The other interesting thing in this article is talking about negative amortization. So that is when their mortgage is actually increasing, not decreasing, because they're not paying it down. And actually, as of right now, only 2% of the Bank of Montreal's portfolio is currently negatively amortized. At one point in 2022, 62% of the Bank of Montreal's variable rate mortgage holders were seeing their mortgage negatively amortized. My expectation is by the end of 2025, the negative amortizations will be basically zero. And the last thing I found interesting in this article was those ultra long mortgages. We talked about this many times before in the channel, 50, 60, 70-year mortgages. That is effective amortization, not contractual amortization. No, you cannot go and get a 50, 60, 70-year mortgage, and nobody's gonna be allowed to pay that mortgage off over 50, 60, 70 years. They're gonna be forced to catch up with their contracted amortization either before renewal or at renewal. But right now, Bank of Montreal has approximately 8% of their mortgage portfolio that has a more than 35-year amortization. A year ago, that was almost 25%. And speaking of percentages, according to the stats in my last video, 60% of you that watched that weren't subscribed. So why don't you go ahead and hit that subscribe button right now and become part of the 40% that are subscribed.
Are forecasts from CMHC and real estate companies biased because they want home prices to go up?
I want this segment to be all your questions in the comment section, so please continue to leave me those questions, and Matilda will peruse through and find the best one, and we'll answer it the following week. I get this a lot, and I find it really interesting. Anytime a real estate company or CMHC, economists, banks, whatever it may be, forecast the home prices are going to increase, it seems a lot of people say, well, those companies are biased because they want home prices to increase. So let's talk about whether or not they actually are. I remember talking back in 2020 about how CMHC's forecast was not going to age well, and nobody was calling CMHC biased at that time. So it begs the question, when people call these companies biased, is it because they're saying something that maybe they don't want to hear? And when they are saying something they want to hear, they're being honest and there's no bias at all? But let's play this through a little bit more. Let's take a real estate company. A lot of people give Royal LePage a lot of flack when they say home prices are up. Well, any real estate company, but we'll just use Royal LePage. It's who I work for, and I talk about them a lot. Whenever Royal LePage has said prices are going up, people talk about other buyers, they're trying to pump the market, etc.
Hello, John. How you doing today? You mailed in my company a postcard a few weeks back requesting information on penny stocks that had huge upside potential with very little downside risk. Does that ring a bell?
Well, you can only run that so long and be wrong before people stop believing you. And at the end of the day, Royal LePage makes money when people use Royal LePage agents. And Royal LePage agents will generally repeat what Royal LePage nationally has to say about forecasts and predictions on the market. And if those agents continually repeating bad information, how long is it before those buyers and sellers say, I'm not using that guy because he keeps getting it wrong? So can you trust any forecast? I've said it many times before. Take these forecasts with a grain of salt and use them for entertainment purposes, because CMHC, Royal LePage, ReMax, none of these companies know what's actually going to happen in the market. Nobody, myself included, has the crystal ball that can tell you exactly what's going to happen. And if you're making a decision to buy waiting for a forecast to turn out one direction or the other, it's probably not a very good plan you have in place, because at that point you're basically just gambling, hoping things work out for you. Here's a quick question for you. What do you call a fish wearing a bow tie? Sophisticated. Let's get you up to speed on this week's best mortgage interest rates. We'll start things off looking at insurable mortgages. The best 3-year fixed is through MCAP at 4.09. That's a decrease. The best 5-year is through Radius, also at 4.09, a drop from last week. Looking at variable rate mortgages, the best static 4.35 through Manulife, unchanged, and the best adjustable 4.25 through B2B Bank. I always struggle to say that, unchanged. Now let's look at uninsurable mortgages. The best 3-year is through CMLS, 4.59, unchanged. The best 5-year is also through CMLS, 4.64, a slight drop from last week. Looking at 5-year variables, the best static 4.65 through Scotia, unchanged. The best adjustable 4.7 through Strive, also unchanged. And another week goes by with the Big 5 banks' best 5-year insurable rates having no change at all with rates or the leaderboard. You know, I'm starting to wonder if the Big 5 banks really want to compete that much on rates. Now let's talk about ReMax Canada settling a massive lawsuit. The lawsuit in the United States, which was filed against the National Association of Realtors, ReMax down there, and I can't remember if there was any other brokerages, essentially stated that it shouldn't be mandatory that a seller provide compensation to the buyers, and that because if it wasn't mandatory, it would drive down prices. They were arguing that prices are inflated because the sellers have to pay the buyer's agent that commission. That brings up a question. Is it time we change the model and buyers pay their agent directly instead of relying on the sellers to do that?
It's been 24 hours. Got my money? Oh, you know what? Just give me till next Friday. I'll have it for you. Oh, that's funny. I could have sworn I said have it today. Yeah, I don't have it. Sorry. Oh, well, all right then. That's good, OJ.
Because of course you hear all the time, use an agent when you're buying because it's free.
How much for beer? It's gratis. Ooh, that sounds expensive.
No, it's not free. You are paying that agent through the purchase price. So you're not paying them directly, but indirectly you absolutely are. And with interest too. Without a doubt, if a buyer has to directly pay their agent, it's going to shake up the industry. Would buyers' agents entirely disappear? I don't think they would entirely, but there would definitely be fewer of them. And honestly, this is a change I think I'd be in favor of. The agents that can continue to show the value to their buyers, they'll continue to succeed. But it would change the way that those buyers are compensating their agent. Would it be still a direct commission based on the sale price, or potentially a flat fee? maybe even hourly? Do the agent get paid up front? Do they get paid at the end? There's a whole bunch of different ways that agents could get compensated now. And did you know I can handpick a fantastic buyer's agent just for you? Link in the description of this video, how to book me in for a call. Let me know in the comments section below if using a buyer's agent was no longer free and you had to directly pay them. Would you still hire a buyer's agent? And what type of a compensation model, commission, flat fee, hourly, or something else I haven't thought of? How would you do that? Let me know in the comments below.